For Wall Street Media, this is Tyler. I'm here with Doug, and we'll help you make money in the stock market with information you can't find anywhere else.
Tyler, how long has it been since I told you how much nicer you are than German Mike?
Yeah, you know what?
About 1 millisecond?
Probably about that.
Okay. Just wanted to confirm that. Guys, transportation, our second one of the week. We had Wachovia, now we've got Dahlman Rose, right?
Yes, sir.
Fantastic stuff. What do you have, Ty?
Well, first of all, you can find all this at wsw.com/webcast/Dahlman2, the number 2. I've got a video for you here. We've got Cy Chewy's the CFO of Seaspan. Their ticker is SSW, and he discusses their strategy for the future to maintain best-in-class operations. Here's the video.
For Seaspan, I think that there's sort of 4 core themes that people see in Seaspan. The first off is the dividend yield. Due to the nature of our business, and the cash flows, and the stableness of the industry, it gives a good support for a strong dividend that's going to grow. Secondly, it's the growth. If you look at our profile, we're growing at a 30% compounded growth rate through to 2012 if we don't add another ship in our fleet. The third is globalization and infrastructure. Again, this is different from the other companies here in that our business is more related to being the ocean highways, as Jerry Wang, our CEO, calls it. It's scheduled service versus really demand and supply and commodity-driven factors. The fourth aspect is value. Inherent in our fleet is tremendous value. Our IPO fleet has significant cash flows to be realized once they come off charter. Okay. Again, we're the fastest and largest growing and largest independent container ship owner. The active asset manager concept is very important. Again, it's about managing and mitigating risk. The focus on cash flow, again, we view this very much as a cash flow business model, not an asset play. What is our business? This just depicts what our business is. We are an outsourced provider of container ships to our customers, the liner companies, which are complex logistical companies. So they'll contract with us such that we'll design, build, crew, repair, and maintain that ship on their behalf. Our customers have many different needs. They have ports, they have the containers, they have the chassis, they got IT systems, they have significant capital needs. And the value proposition for them is quite simply they get a high value asset at a low cost with cost certainty for a long-term period. The way to think about Seaspan is very much like a floating REIT or a floating pipeline. As long as we provide that asset to our customer, whether they utilize that asset fully or it's sitting at the port waiting to be unloaded, we still get paid. We're not responsible for fuel. We're not responsible for port-related expenses, again, because our customer tells us where to take that ship and how fast to go. So again, it's a very steady cash flow and model for us.
Alrighty, that was Seaspan. I got another note for you. You want some of that?
I want some of it. Bring it, Tyler.
All right, Doug, I will. We got Softly Zulis. He's the CEO of EGLE Bulk Shipping. Their ticker is EGLE. He discussed a new building program in China and Japan, which will secure sustainable growth at a rate of 1 new vessel in each quarter for the next 4 years, as well as revenue increases by 39% through 2009. And I've got one other note for you. You got anything about them?
Eagle Bulk Shipping, good business. Been working with them for a long time. Right now, everybody's talking down the economy so much, right, that there's a little fear in the stock, but their dividend's 9%, Ty, and they got a PE of 15, right?
Yeah.
They got a nice volume, trade 1 million shares a day, right, very liquid. I think they're a good company, and with a 9% dividend, man, that might have Doug written all over it.
Yeah, I like that too.
Up 4% for the day today.
Not bad.
Yeah, made a good presentation, and that 9% dividend's looking pretty sweet.
We got one more for you here. Evangelos Chatzis, Deputy CFO of Danaus, ticker DAC. He spoke about their continuing to acquire assets at or below historic averages, thus freeing capital to secure future growth of new clients. The company's return of equity has been in excess of 15%, due in part to contracted locked-in growth, which with its current order book.
I'll tell you what, this is another one, Ty, and I'm really glad you brought these to my attention, pal. These guys dividend 9.7%, up 4% for the day.
Wow.
$1 billion market cap, right? Guys, it's the stuff worth looking at, man. You can feel free to pat Tyler on the back for bringing this to your attention. Although I did see, I think, what is it, Orange Savings is now paying 3%, and you don't get any capital appreciation there. You get a 4% you made today, and they're paying a 9.7% dividend.
And that is high for a bank to give you in, what's that, a savings account?
Yeah.
That's
an online savings account. Oh, the internet's broken.
So.
Lost your account, Doug.
Oh. That's happened to you before, right?
It happens just about every time I deal with anyone.
Anything that I can imagine has happened to you at least once.
I'm going to be able to write a good country western song by Friday if this week keeps going this way.
I'm going to light you on fire by Friday if it doesn't keep going this way.
I'll be grateful.
Right.
Anyhow, guys, that's the Dahlman Transportation Conference, and those are two gems for you there with great dividends. Look at this, guys. I don't know how to say their name, Tyler. Danos? The ticker's DAC. I know how to say that. Geez, oh, man, 9.7% dividend. They're near a 52-week low, right, because the world is ending? Oh, that's right. The world's not going to end, guys. You take a look at these, and this is the Dahlman Conference. You can listen to the whole thing for yourself and use it as a starting point.
Yep. Great. We're here every day at Wall Street Media. You can find us directly at WSMCO.com. Thank you.